Well, good morning, esteemed guests. It's my great honor and pleasure to welcome you here today at the Central Bank of Austria. And today the issue at stake is nothing less than trade policy beyond the inflection point. Well, we live in times marked by rapid economic change and geopolitical uncertainty. And pointing this out has almost become a kind of cliché or a truism. I know, but what lies behind this is that long-held assumptions are being called into question. And at the same time, new prospects for growth are opening up. And it is precisely these developments that we are discussing here today. So I'm convinced that if an institution has a commitment to shaping the future, and we at the Central Bank of Austria certainly do, so if you want to shape the future, you need the ability to adapt very quickly. And we at the Central Bank of Austria have this ability. I say this really with great conviction, for in the 1.5 years that I have now been working at the Central Bank of Austria, I have had the opportunity really firsthand to experience firsthand the intellectual strength and capacity of this institution. At the Central Bank of Austria, we are constantly adapting to the changing environment, and we are strengthening our ability to meet increasingly complex challenges with both experience and foresight. And our guiding principle in this regard is a very simple one, and it is really unshakable, namely, effective decisions are based on reliable data. In today's meeting, we look at three main aspects. First, how monetary policy works in this environment. Second, how decisions are made under uncertainty. And third, how global capital flows are evolving. Let me start by taking a look at the broader global environment. In recent decades, economic integration has increased significantly, as we know. Economies of scale, competition, and innovation have fueled growth, and globalization acted as a kind of tailwind for monetary policy, lowering production costs and helping to keep inflation stable during the Great Moderation. However, these stabilizing effects have weakened in recent years, as we know. Since 2020, the COVID-19 pandemic, Russia's war of aggression, and broader geopolitical tensions have disrupted supply chains and have increased economic vulnerabilities. A key trend in this topic, in this context, a key trend is trade fragmentation, or in other words, the policy-driven reversal of global economic integration. This includes rising tariffs and technological decoupling, as well as increasing restrictions on capital flows. And this development carries, of course, significant risks. Let's keep in mind that, according to the IMF, geo-economic fragmentation could cost the global economy up to $300 billion a year. And at the same time, inflationary pressures are rising and efficiency is declining. It is this kind of toxic cocktail that ultimately places a greater burden on businesses, a greater burden on governments, and a greater burden on consumers worldwide. Well, let's recall, from 2025 to early 2026, policymakers in several major economies introduced a series of tariffs and restrictions on trade and investment. And it was these decisions that marked a significant shift toward a more profound separation of global trade and financial systems. And that more profound separation was stronger than seen in recent decades. And of course, for central banks, this creates also a fundamental challenge. Because a fragmented trade may lead to more persistent inflation pressures through higher import costs, weaker competition, and less efficient supply chains. Obviously, in this case, central banks play a crucial role as they have the function to maintain stability. And at the same time, it is important to realize that in the interest of maintaining stability, in this interest, these decisions may also entail disadvantages, such as higher costs for economic activity. And we are already seeing new trends as well, such as friendshoring. This involves shifting supply chains to politically like-minded countries simply to reduce dependence on geopolitical rivals and to prevent global supply shortages. But despite everything, global trade has proven to be remarkably resilient. In 2025, global trade grew by around 7%, with strong contributions from Asian economies such as Vietnam or Taiwan. And the exchange of services and international tourism also expanded significantly, as well as foreign direct investments, which likewise rose, albeit partly due to a few large transactions. Let me now turn to the Austrian perspective. As a small open economy, Austria is naturally particularly vulnerable to global developments. External shocks can quickly lead to domestic inflation, particularly due to rising import prices, such as those resulting from disruptions in supply chains. This means that trade fragmentation can even have a greater impact. Well, at the same time, the effects are not always straightforward. While higher costs push up inflation, weaker demand can pull it down. This situation significantly complicates monetary policy decisions. And looking ahead, the war in the Middle East and unpredictable US tariff policies continue to pose major challenges for the Austrian foreign trade sector. Disrupted supply chains, rising transport costs, and energy price volatility obviously remain key concerns. So far, however, Austria's trade structure has remained relatively stable, I may say. While imports from China have increased, traditional markets within the Eurozone continue to dominate, and trade with the United States has remained broadly stable, despite recent tariff measures. And in addition, new and expanded trade agreements with Switzerland, India, Australia, and the Mercosur offer opportunities to diversify and to strengthen trade relations. This brings me to the key foundation of all these developments, namely reliable data. High-quality data are simply essential for understanding economic developments and for making sound policy decisions. It goes without saying that policymakers and businesses depend on information that is relevant, that is timely, that is comparable, and that is methodologically sound. Basically, international statistical standards are therefore crucial. And the most recent updates to global statistical frameworks reflect the growing importance of globalization, of digitalization, and of multinational enterprises. In Austria, the central bank works closely with Statistics Austria. This collaboration ensures that complex economic structures are accurately recorded. Examples are shell companies or special purpose entities, which channel large sums of money through a country without contributing to the national economy. So, reliable data is crucial, not only for policymakers, but also for businesses, for researchers, and for the general public, as I said earlier. It provides a clear understanding of current developments and therefore contributes to better assessments and to better decisions. And recognizing this, the Central Bank of Austria is significantly expanding its range of services. In other words, we are making our data, our analysis, and our expertise much more accessible to decision makers in politics, in business, in academia, and the media. This includes timely and relevant analysis, data, and assessments on current topics, as well as state-of-the-art forecasts and scenario analysis. This approach is reflected in the new strategy of the Central Bank of Austria. We simply aim to make our expertise widely available to society. In this way, we first seek to help make economic relationships easier to understand, and second, we want to promote evidence-based decision-making. A key component in this service initiative is the development of modern digital and interactive products, of course. A new data platform is currently being developed to make this extensive and ever-growing range of data available in a way that is tailored to specific target groups. And all these efforts are aimed at what I just mentioned, enabling better understanding and better decisions in a rapidly changing economic environment. And that brings me to the broader outlook. Well, looking ahead, one thing is certain. The global economy is at a turning point. Trade fragmentation, geopolitical tensions, and structural change are reshaping the economic landscape and are making monetary policy more challenging. And at the same time, the resilience of trade and investment shows that opportunities still exist, even in a more fragmented world. This makes it even more important for central banks and for policymakers to be aware of their responsibility and to make informed decisions. The key question still remains: how do policymakers respond to this new reality? For Austria, this environment requires careful balancing, of course, because again, we are a small, open economy, and as such, we are particularly vulnerable to external shocks and uncertainties. So once again, this makes one thing very clear. Well-informed decisions require reliable data. Quite simply, because in a rapidly changing world, good decisions depend on good data. Thank you very much.
Thank you, Vice Governor Stiftinger. Good morning, everyone. Welcome to this high-level EIB OeNB meeting. As the first item, I have to announce a change in plans, unfortunately. The next speaker, Elisabeth Christen from WIFO, informed us yesterday that she's unable to come due to sickness. We wish her a fast recovery. But the good news is that a colleague of hers, also from WIFO, Haidar Karim, was ready to step in and to give the presentation in lieu of her. Haidar is a well-known researcher at the OeNB. He has served for some time as research assistant in our division in international economics, and we are very glad to have you back here. Where is he? Here. To have you back here at the OeNB, and thank you very much for stepping in short notice. You're gonna talk about the same subject, which is the new trade reality, scenarios, costs, and options for Europe. And this is Haidar Karim. 20 minutes presentation, not more, and then question and answers. Thank you.
Good morning, and thank you for having me. I want to talk this morning about something that has quietly become a central question of economic policy in Europe: not inflation, not interest rates, but the ground that things rest on, the trading order itself. For decades, we built prosperity around the notion that the world is a positive sum game. There are absolute gains that everyone can benefit from, but that reality has changed rapidly and abruptly in recent years, and we are more in a zero-sum kind of world nowadays. So I want to show you around concrete scenarios what that means for Europe, for the world, and for Austria specifically. Let me give you the map for the next 20 minutes. I'll start with the big picture, the geoeconomic turn that we are witnessing currently, then go to concrete two cases, the American tariffs. I'm talking about the second tariffs in the second administration last year, and the closure of the Strait of Hormuz. Then I will show you briefly from WIFO's business survey what that means for firms precisely. So what we are witnessing is the return of power as an organizational principle in trade. For generations, the logic was absolute advantage. Everyone could gain at once. The logic now looks more like a tournament. It matters more that I gain relatively to my adversaries or competitors. This is a meaningful different world, and it changes the behavior of firms and it changes the behavior of countries. In this world, economic dependence stops being only something of efficiency and becomes a lever, a way to pursue foreign policy and security policy goals and economic policy goals. Trade gets weaponized. We see it in three places at once: the fragmentation of supply chains along geopolitical lines, the disruption of trade routes, and the erosion of the multilateral system, unilateral protectionism, and a World Trade Organization that is increasingly limited in its way. The point I'd stress for this audience is that geopolitical risk is no longer only an exogenous shock that arrives and then clears and then we go back to normal. We play again free trade. It is rather something that is becoming part of the way of life, so to speak. And it operates as a standing channel running through energy prices, shipping lanes, and access to critical inputs. It is becoming part of the baseline rather than the deviation from it. So we are watching two economic blocks pull apart over the rules, the technologies, the securities structures, and the dependencies that will shape the next decade. And the divergence is no longer only rhetorical, it is visible in the trade data. So what you see here is bilateral trade. This is the blue line between the US and China indexed as 2016. And what you can see at the end of the line is that bilateral trade between China and the US is now 38% less than 2016. You might think, okay, this is deglobalization that is constantly talked about, but that is the wrong story, because you can see in the gray line the trade between the trade with from the US with the rest of the world and from China with the rest of the world is increasing. So it is not deglobalization per se, but trade routes are rewiring around geopolitical alliances, and that ripple through supply chains, energy routes, and so on. So as the structure rewires, the question for us is where Europe sits in the new map. So what you can see here is a multipolar trading world, so to speak. The left, from your side, the right chart, is trade between the three biggest blocks in the rest of the world, so Europe, China, and the US. And you can see that in 2019, Europe and China were the leading trading countries or regions in the world, with 67, being the main trading partner for 67 countries. And in 2025, you can observe what we are observing for over 2 decades now, the rise of China overcoming Europe and being now the biggest player in the world currently. And you can see also that the Americans are roughly staying the same, while we know that the Americans rely less on trades than we do. They have a stronger domestic market. I don't want to over-dramatize this. Europe remains an enormous market and an indispensable partner, but the trajectory is what matters for strategy, because a declining relative position tends to mean declining leverage, and leverage is the currency of the tournament logic that I just described. Trade at the end is a physical act. Goods move on ships and through a handful of narrow choke points, and those choke points have become a front line, as we all learned this year. Take the Suez Canal. So this is a red dotted line here, and it shows the transit volumes are still running at only half about of pre-crisis level, even though from a geopolitical security point of view, the crisis seems to be resolved. Still, trade did not recover. Vessels are routing the long way around the Cape of Good Hope in South Africa, adding days, fuel, and costs and to supply chains and embedding that into prices at the end. The sharper risk is at the other end of the Arabian Peninsula, the Strait of Hormuz. A closure there is a different order of magnitude. First of all, because trade of critical energy starts there. And roughly 20%, I'm sure I'm not the first one to tell you that, of global crude trade goes through the Strait of Hormuz, and roughly a fifth of LNG, a quarter of LNG. For Europe specifically, around 8.5% of our LNG and 7% of our crude passes through the Strait of Hormuz. So when we model a maritime shock, that is not a thought experiment. Unfortunately, it is a question of which strait, for how long, and how exposed we are. If you want to see how markets feel all of this, you can simply measure it. So what I show you here is two indices, a geopolitical risk index and a trade policy uncertainty index. And what strikes me is not just the level, but the persistence that we are observing. There used to be spiky series, a crisis, and a jump, and then a return to the old world that we're used to. The elevation now looks more sustained. And here's why it belongs in a central bank. The research suggests the trade policy uncertainty itself can act like a non-tariff barrier. You don't need a single new tariff to believe it. The open-ended possibility is enough to make firms delay investment, hold back hiring, and shorten their planning horizons. The American approach has been framed as reciprocal, fair, and balanced, but economically an asymmetric deal that singles out one partner sits uneasily with the most favored nation principle, cornerstone of the World Trade Organization, and effects are already measurable. There is a direct effect. So Austria saw exports to the United States fall by about 20% in 2025. As the Vice Governor mentioned before, trade remains stable, but this comes from a difference in statistics. So this is a foreign trade statistic, which refers only to goods, while the governor was referring to the balance of payments, which includes also trades in services, re-exports, and adjustments of the goods. So for Austria, it means a 20% decline. But notice the composition at the EU level, exports actually rose by 3.5%. And this is driven largely by a surge from Ireland in pharmaceutical exports that were front-loaded before the tariffs, ahead of the tariffs. So the headline can mislead, you have to look underneath it. Then there is the indirect effect, and this is a more concerning one. When the US diverts Chinese goods away from its own markets, these goods look for a different kind of market, and our European open markets are, of course, the first choice for them. So we can be affected twice, one through our own loss of exports and again through diverted competition arriving on our shores. And over all of it hangs escalation risk. So the Supreme Court, the American Supreme Court ruled liberation tariffs as unconstitutional. The American administration remains fierce in finding a way to impose tariffs, so we don't know what happens in the upcoming months. So to say something more rigorous about magnitudes, we need a model. This is where the work of my colleagues, Elisabeth Christen, Gabriel Felbermeier, and co-authors comes in. The tool is the KITE model. It is a multi-country, multi-sector trade model with input-output linkages. In plain terms, it let us trace the shocks through the global production network and read off orders of magnitude. I'd ask you to treat it as a structured what-if exercise and not as a forecast. We run 3 scenarios that between them span much of the plausible range. The first scenario is higher trade policy uncertainty, so the 3 standard deviation above the 2010 to 2024 average, roughly where it stood at the start of 2025. As I said, that behaves like a non-tariff barrier. We model it as equivalent of 9 percentage point tariff shock that raises no revenue because it's non-tariff barriers, so cost without compensation. The second is a comprehensive European Union-US trade deal. Tariffs eliminated on both sides and non-tariff barriers also cut, with the EU cutting more because it starts with higher barriers. And the third is the actual US-American deal that was agreed on in Scotland last year, a 15% US tariff on EU exports, 50% on steel and aluminum, and various carve-outs. So a bad case, a good case, and the actual case that we got. Here are the results. The short run and the long run. So let's start with the headline. In a full tariff conflict, broadly, of course, everyone does lose. The EU and Austria loses on the order of 0.2% of real GDP, the US about 1%. Modest sounding percentages, but on economists this size, this is tens of billions of euros each year, and Europe's export-oriented core takes a heavier share. The findings that are more surprising: under sustained uncertainty, not a war, just a persistent fog. It is the US that the model shows suffering the most, with output potentially down close to 1% in the long run, while Europe again sits around 0.2%. And the constructive result, a genuine mutual agreement, leaves both sides better off than escalations. EU welfare rises by something like 0.7%, and the US above 0.4%. The line that I'd ask you to take away is a reframing rather than a recommendation. The choice is not between today's status quo and a deal. The choice is, the realistic choice is between escalation and a deal. And for Austria, the model gap between those passes is in order of 0.8% of GDP. I treat the size and the sign as not as a precise decimal number. As for who feels it, the effects are uneven across sectors and industries, of course. The most exposed sectors are largely our own crown jewels, so to speak. Pharmaceuticals, machinery, automotive, chemicals. That distribution fact isn't a footnote, it is much of the politics of trade policy. That was the tariff case. Now the second case, the physical world reaching in. We pointed the same approach to the Strait of Hormuz. The mechanism is an increase in iceberg trade costs on Gulf energy exports. Think of part of the cargo melting away en route, and we let the disruption differ by exporters, with the most exposed Gulf producers modeled as hardest hit. So the most affected, of course, is Iran itself, Iraq, the UAE, Kuwait, Qatar, and less affected is Saudi Arabia because they have the east-west pipeline, so they can divert parts of their exports away and don't rely as heavily on the strait as the others. The welfare effects came out sharply uneven in the model of the heaviest burden falls on Asia's energy importers, South Korea, for a full percentage point Japan, and if you follow East Asian media, you will notice that they are in a way more panic mode than, for example, during COVID, because they were prepared for the COVID crisis while we weren't. They are not prepared on the crisis ahead of them. They are searching for various ways to reduce their energy demand. The warning on the data is the second round. We should expect supply chain problems coming out of the Gulf in things we rarely think about. So helium, fertilizers, kerosene, the direct energy bill may be survivable. The supply chain ripple is the part that I would watch. And those ripples don't stop at the border, they travel into prices. So this is where maritime risk becomes a monetary story, basically. An energy price rises from Hormuz closure doesn't stay in the energy sector, it passes downstream into chemicals and fertilizers, and from these into agriculture and food. When you look into how single upstream shocks fans across sectors, it lifts the inflation rate and it erodes price competitiveness. So it is basically a double cost that we are observing. And here's the more structural problem. Even where a specific crisis ends, even with an agreement to reopen the strait, as fragile as it is, Europe still has to absorb the disruptions that comes before. So these shocks tend to arrive in series rather than in isolation, and each leaves some residual in the price level. For monetary policies that suggest supply-side shocks may be less a rare event to look through and more a feature of our contemporary times. So that's the threat environment. How is the real economy responding? We asked firms directly. So WIFO does a regular business survey. We asked firms that they tell us in their own words how they are adjusting their exports and import strategies in response to geopolitical conflict. The headline is that adjustment is real and fairly widespread. This is showing up in procurement and sales decisions, not just in boardroom discussions. Firms are diversifying suppliers. They are seeking new markets, reshoring or nearshoring selected inputs if possible, and building in redundancy. So the honest caveat is that resilience, of course, has a price. Each of these moves trades some efficiency for some security. So in aggregate, the economy is paying something like an insurance premium, if you want to think about it like that. And it's an open question whether firms are building genuine resilience or simply reallocating the same risks. Which leads to a more hopeful part of the picture, so I'll be careful about how far I push it. Europe has a structural asset that changes the calculation. So the asset, of course, as everyone here knows, is a single market. And the question I'd frame is whether it can act as a buffer against external shocks. The evidence is encouraging within limits. Work by Felbermayr and colleagues finds that European integration roughly halves the regional dispersion and welfare effects and protects the most exposed regions also the most. This is property you want from a shock absorber. It works hardest where the blow lands hardest. I want to be precise about the claim though. This cushion and redistribution, the impact of the external shocks, it does not neutralize them per se. The single market reduces the fragility. It does not confer immunity. Within that limit, the mechanism, of course, is intuitive. An integrated market offers alternative customers, diversified supply lanes, and a degree of risk sharing across regions so that integrated value chains absorb some form of the costs. One practical idea that for firms is what I call trade intelligence, that they map their geopolitical dependencies, so critical inputs, key material, transport routes, and build a map of resilience strategy in this current geopolitical environment that we are in. Resilience is closer to a competitive advantage than a pure cost. So if the single market is a shield, the final question is how we shape it without pretending any of this is a cure. Let me put the strategy in one phrase: the size matters. The deeper and more dynamic the single market is, the more weight both our threats and our promises carry, and the larger our buffer. Strengthening it is probably the highest leverage that Europe can do, and it amplifies everything else. On the toolkit 3 points, I'd offer them as an option with trade-offs, not a blueprint. First, our defensive instruments, the anti-coercion instrument, anti-dumping and anti-subsidy measures need to be credible and ready rather than only theoretically debated in various forms. Second is diversification, ratify and activate the agreement already on the table, pursue de-risking and decoupling whenever possible so that no single partner holds undue leverage. Third, defend the rules-based order itself, and maybe this is, I would say, the most important thing. A predictable, law-governed Europe is not naive in a world of more arbitrary power. Predictability has a real value, and it helps attract the capital and also the talent that funds our transition. the thread running through all of it is that trade, industrial, and energy policy can no longer be run in separate rooms because the shocks themselves are linked. Maybe they always were. And because this is how we reduce the risk of renewed inflation-driven losses in competitiveness, economic security has become a policy objective on its own right, cutting across each of our portfolios. So let me bring back where I started. We have passed an inflection point. The old order is simply not coming back, and I would be cautious of everyone who's claiming that it will. The simulations point to something more hopeful, if modest. The gap between escalation and cooperation is real and economically meaningful. And Europe is not a passive bystander to this new reality. With a deeper single market, a credible toolkit, and a steady commitment to the rules, it has real capacity to cushion these shocks. Thank you very much.
Thank you, Haida. I think we have time for a few questions. Maybe we collect them. You go first.
Thanks. Thank you for the very interesting scenario and model, and of course input-output model. Fair enough. Apart from these two shocks that we already know exist in the world, have you tried to model any other possible disturbances shock? I mean, have you guessed of the factors that we don't have yet as a risk factors to trade? If yes, which were these factors and how they impacted the results?
Let's collect the questions. There was a second one here, I think. Patricia. Yeah.
Thank you. Patricia Wald, the Österreichische Nationalbank. I hope I can add a little bit to the possible confusion about the data that WIFO displayed on the US-Austrian trade relations and what our vice governor said before. What WIFO is referring to is international merchandise trade statistics, which measures if merchandise goes across the border, while the central bank is focusing on who is trading and is there a change in ownership. So more or less we are contributing to a value-added measure. As our vice governor said before, it's important to have reliable data, and we are already in exchange with WIFO, especially with Elisabeth, who is unfortunately not here today, but we want to work on this difference between the two data sources. Thank you very much.
And Wolfgang here in second row.
Sorry.
Thanks a lot for your presentation. I have just one question with respect to your last slide when you showed us the policy initiatives and possible measures. So in the past, we relied on the idea that liberal globalization would allow distribution of production, which would then lead to the most efficient production and the consumers would benefit. But we have seen that some parts of these global value chains or these integrated markets would use some unfair measures like subsidizing their production, as we have seen in China. And we've also seen that our colleagues in the US would have a very relaxed attitude towards cartels and monopolies, especially in the IT sector. And Europe would always allow the imports from these regions, and then that leads to kind of path dependency. So even now that we have established these specializations, is it possible to undo these kind of patterns of trade and production and gain a more competitive stance in the world order? Or do you think that we would need some additional measures?
Please.
So, with the first question regarding different kind of risk factors, so colleagues of mine are working with various scenarios. One scenario that has popped up recently, if not very credible, is the Strait of Malacca and Strait of Singapore. That is an even more critical trade route, especially for Chinese exports. And there might be a policy brief coming about that soon. And with respect to the question about, from Wolfgang, of global supply chains and the IT sector per se, I mean, if you ask me, I think we need to be way more concerned about that. You had those sanctions imposed against the judges of, I think, the ICC or the ICJ, and they are not that critical for our institutions per se, but it is still incredible that the Americans are imposing sanctions and that the head prosecutor is not able to access their emails anymore. And imagine if, who knows, tomorrow Greenland is on the table again and the Americans are imposing widespread IT sanctions on the Danish government. So I think we really need to be more careful about what is happening there and build critical infrastructure in the IT sector. So I think this is a very, very important point.
So we have 1 minute left. One last question back there.
Yeah, goodbye, formerly WIFO and Ministry of Finance. You mentioned the single market only as a defensive shield against external shocks. I'm just wondering, from a policy point of view, why the European Union doesn't really increase its trade within the single market relative to external markets. When we compare the EU and the single market to the US, we see that the US trades much less with third countries, most of it within the US, than the EU does. And so, of course, you have, as you mentioned, if you trade within the EU, you have policy assurances, you have no exchange rate risk, you have similar kind of demand patterns. So, of course, it doesn't mean that you should not trade with external countries, but the share of what you trade within the single market, I think, would be a policy direction which the EU could do. And it would also add to less external imbalances on a global scale. The EU, as we all know, is a net exporter and therefore also exports capital, which we need here. So there's a lot of things one could really solve with more concentration on a single market. Thanks.
Yeah.
Okay, thank you. We have to move on. Thanks again, Haider, for stepping in. Next speaker is Matteo Ferrazzi from EIB on financing investment in Austria under heightened uncertainty. Thank you.
Thank you so much. So we are perfectly on time. So my role is to focus on investments. So it's not only the name of the EU bank, that is the European Investment Bank, is the lending arm of EU institutions, but especially because investments, they play a special role for our future. So we will see how important they are. The slides I'm showing are based on two main reports. One is the investment report. You have the QR code there. And the other one is the report especially related with Austria, but we cover all the European countries. So our exercise is mainly to compare the countries and try to understand where there are, let's say, investment gaps and room for intervention at EU level. The Austrian report, you will see some data now from the Austrian report very soon. So let's start from, let's say, the basics. This is the, let's say, I'm trying to disentangle here investments, retail and corporate. This is at EU level. So we are talking about the general EU. You see that this red one, red part is the public investment, so the government. And you see how more important is the role. From one side, you see the general investments. So this yellow line is rather resilient. So you have seen that in the last years, investments has been resilient. So companies are holding good, they are investing. And of course, there are multiple challenges from IT, from energy and so on. And companies are still investing quite okay. But okay, we don't see any boom like before. And there is one issue here, that is the government driving this, especially because of the next generation plan and so on. So the main challenge of the future will be to involve private investments, and especially corporate investments that you see there in blue one. So they are rather weak at European level. The picture is even weaker for Austria. This we know. It's not a big surprise that Austria has been influenced very much from the German economic trend. And you see, I put also down the GDP growth. So these two minuses in the growth of the Austrian economy that we have seen in 2023 and 2024, they are one-to-one resembling Germany. So why Austria has been weak? Mainly because of the German economy. This happens for many countries in Europe. So without a strong Germany, many countries in Europe are suffering a lot, especially around Germany. So the Netherlands, Luxembourg, Denmark, Czech Republic, and many Eastern countries, Austria, Slovenia, and so on. So this minus is typical of Austria and Germany in 2023 and 2024. And you see also in investments that were dropping down, and especially corporate and retail investment. So retail investment means mainly houses, real estate. And you see the only upper, let's say the red part is the government. So even more than what we have seen at EU level, you see that the Austrian government was playing a role in sustaining investments. So that's good from one side. On the other side, that's the private investments should accelerate. And here you see a broader picture. You see that Europe investments were growing, and you see that Austria was, the Austrian economy was in 2023 and 2024 a victim of the trends in Germany. This is excluding Ireland, not anything against Ireland, but there are very volatile data that are hard to explain. So that's the only reason why EU is without Ireland. But you see how big is this gap that was, let's say, building up since 2021. The last year, you see that Austrian investments are better. Of course, this chart is built on the basis of some moving average. So let's say is influenced by the previous quarters. The things are a bit better now, but you see that we start from a relatively weak position. So now I also have the possibility to divide the investments in different categories, but I want to focus, so you find a lot of categories in our reports, but I wanted to focus on two main things. So I will here neglect the trade part that was covered very much, but I will focus on innovation and energy. So why these two? Because this is now, as was mentioning before, a matter of economic security of you. I think the IT issue that you were mentioning, or you heard about Anthropic, so this possibility for the US government to push a button and switch off the systems for us is a risk. So let me skip trade and move to what we asked to the companies about the kind of innovation. First of all, we asked to the companies, are you investing in something new, in some innovation activity? And you see here Austria in yellow and red, and EU in blue. So this is some new to the firm and new to the country or the global market. So the darker color is when the company is trying to invest in something new for the global market, some new product or service. And you see that these are lower than 2023. Why? Because, of course, with weak investments, we have seen a weakening also of this innovation activity. Rest of investments are mainly replacing, but especially you see that Austria and EU are really lower than the US companies. So US companies are 53%, they say, we are creating something new for our firm or something new for the global market. This is really big. When I've been there, I was visiting 3 years ago, the Silicon Valley, I was shocked. I think these guys are completely sick for innovation. They were pouring money in innovative firms without any concern about the risk. So they were really having a completely different logic and mentality. Of course, there are very good universities. They had in that years a lot of immigration, very qualified immigration. They had a lot of financial resources. But for me, what was astonishing was the mentality. They were constantly thinking day and night about how to produce and finance something new. Because there is a huge ecosystem there that was, let's say, very beneficial for the innovators. And they are all competing each other, and they are ready to lose their entire money, but just to try to do something new. And you could see this not only in the labs of universities, but even in the streets. So they were presenting their products in the streets. I met some guys that were, for instance, I thought they were the interns because they were so young. Around 23 and 24, I thought, okay, their first job is to give me the leaflet. And this was presenting a car with solar panels. And this was the engineer of this car. And I was shocked how good was this person and how stupid I was to think that he was the intern giving me the leaflet. And they were sick for innovation. And you see here how much the US is still producing innovation. So they are doing something really bad for their company at the moment with this, I like the expression of the vice governor saying this toxic cocktail of tariff, but they're still strong in innovation and artificial intelligence, especially, and this must be taken into account. So here I can also disentangle. We asked to the companies how they feel with innovation. I wanted to point 2 points. First of all, this level in Austria is slightly lower than EU. Second, there is a lot of innovation among Austrian companies in manufacturing. So manufacturing is really driving a lot. But if I compare with you, for me, there are two different things. One is Austrian companies are a bit less innovative on services. So the competition now is very important on services and IT. And that's really a pity because Austrian economy is structurally very strong, very solid. Companies are very strong. But you see that in the last years, the innovation activities in services were weak. So if there is any policy or any strategy for a company to push forward on this, on innovation in services, that's probably the right moment. The second point, there is around the world always a gap between the large companies and small and medium enterprise. This is everywhere. We cannot pretend that this is not there. But in Austria, I see now in recent years, this is increasing very much. This is very big. So the gap, maybe you're far away, you don't see, but the gap between large and SME is double in Austria than in EU on average. This means that there is less innovation in the small, medium enterprises compared to the European ones, and there is still a very good innovation environment in the large Austrian companies. Once again, so that's also having strategic implications that the SME sector should be, let's say, pushed and favored because most probably there is fantastic environment here to do innovation, but the small companies at the moment are not pushing for it like the large ones. So I think our survey can help us to disentangle this, and then the bank is normally financing activities like small and medium enterprises via the banks with intermediate lending or some other projects that are a priority. Then we ask about intangibles. The definition of intangibles is mainly based on, you see, software, IT. The orange one is research and development, and then the organizational and training of employees. While the non-intangible means machineries, land, the more traditional one. Why is it so important? Because in the last years, we've seen that investments in intangible are really shaping the competition around the world, especially on IT side. The red part, so the investments in software and IT are very good in Austria and increasing. That's good news. On the other side, we see that Austrian companies are investing much more than European companies in intangible. That's another good news. But the bad news is that this gap is reduced now. In the last years, you see how the Austrian line, the red line, is going down, and the gap with EU is reduced. Not because EU is growing so much this, but Austrian companies are a bit prudent in the last years, because we have seen why, on investing, and especially on investing in intangible. That is something very important. Remember that this is our future. Software, IT, artificial intelligence, research and development, and the training of employees. So it's mainly let's say the brain part of each company that is very important. So Austrian companies are very strong with intangible, but less, let's say the gap is less pronounced. The gap with you, the positive gap with you, is less pronounced than in the past. Last point I wanted to touch is on artificial intelligence. That's a big issue. We asked, you see the chart on the left, we asked to the companies if they are using generative AI. Of course, it's only using, not producing. Most of the language models are produced in the US and in China. We know that Europe is very weak. We have only two important language models among the top 50. So we are talking about usage only, but still Austria is really having a good positioning compared with the European Union average. You see the light blue bar. And the European Union is in line with the US. So US is very innovative on the frontier, on the production, on the development of the models. But in terms of usage, if you look at the entire ecosystem in all the federation, the US states, the usage of AI is very similar to EU, and Austria is better. That's very good news. What is different in the US is the usage, so where they use artificial intelligence. That's the other chart. I read for you far away. I give you this additional service. So the customer service, for instance, US companies are using much more for customer services artificial intelligence. They are using much more for internal processes, and they use much more for marketing and sales and human resources. So there is a broader use, while the European companies and Austrian companies as well are mainly focusing on internal processes, marketing and sales. So what does it mean here? That there is a room to broad the usage. I thought it was my phone, and Italians is always the mother calling at any time, and I didn't want to have this problem. About the artificial intelligence, that's very very important because this is of course our future. These data are from last year, so I'm pretty sure these were increasing. Interesting enough, everybody's looking for this data because there are not many statistics about that. And these two charts were in the Economist, in the magazine, and they started a big debate how we can use artificial intelligence. For instance, using artificial intelligence for human resources can create some problems in some realm in our, let's say, European society because of privacy and many other things. Last point, European Investment Bank is also the climate bank. And I wanted to touch on energy investments because there is an energy crisis, Hormuz, and so on. So for me, it's very important. We are not those people like, only liking the nature and hugging the trees, but that's the economic security of Europe. That's not something only to be good and nice, but that's a very important point because without energy, we are in troubles. So we are asking to the companies, how do you see the transition to the net zero economy? Austrian companies in the past, they were rather enthusiastic. They say, for me, it's an opportunity. 40% of companies, they were saying, it's a big opportunity. We produce already these green goods. We are there, and that's a good market that is developing for us. We can sell in China, in the US. And those looking as a risk, they were less, 30%. But as you can see from the chart there, it's a very simple chart, just 2 lines, the gap is now lower. So the companies are starting to feel a little bit of fatigue, probably because they are saturating some markets. The focus on the transition is less than before. And you see that this gap is not so big now, and that's a bit a source of concern. So Austrian companies are signaling now that they're not so much enthusiastic like before because they see an issue in the transition. We know what happened with the automotive sector and so on. So we have seen that the transition was not going so fast as we could hope. What happens in the EU is even the opposite. And this data there is very much influenced by Central Eastern European countries, in which a lot of companies, they say, I see as a risk. I still use coal, oil, gas, and that for me is a risk. So if we push too fast, I see a risk for my company. And still 30% this is an opportunity in EU, but the majority they see as a risk. So this, let's say, considering the transition as a risk, contrary to Austria, was probably pushing some companies to push for some revision of some rules. Last slide I have is also about the energy transition. Here I'm monitoring the measures to improve energy efficiency on your left. You see Austria is really very, very efficient there. The targets for greenhouse emissions, so if you set targets, and the energy audit. So that's very relevant. So these three things means that the companies are working on the energy transition mainly. I repeat again, one is investing in measures to improve energy efficiency. We know that the best energy is the one that we don't spend. The second one is targets. You set targets. You have targets in your company. And the third one is the energy audits. So you see that Austria is a bit better than EU on the left side, on the measures. But what I wanted to point here is again the gap between the large and the small companies. That's huge. 1/3 of companies in the case of measures, and the energy audit even 50. So there is, if I remember well, is 85% of large companies are doing energy audit. So they want to save energy. They have this audit. And for the SME is 50 points less. So it means that my mathematics should be quick, is 30%, 35. Of only 35 of SME companies are doing this energy audit. So once again, Austria is really showing a big gap between the large and the small companies. This is a little bit the leitmotif. So let me summarize what happened. We only on investments. So just to complement what we have seen before. Investments in EU has been resilient, not so much in Austria because Austria was affected by the German trends. But now there is a big challenge to accelerate on the private side. So we are in front of important period now. Private investments, of course, there is a lot of potential, as we were saying before, about the common market. And there is a huge potential from EU integration still, despite the tariff with the US. And then we have seen, we didn't see, I didn't show you the slide on tariff. When there are these multiple trade shocks were influencing very much the companies, but more the US companies. So Austrian and the European companies were rather resilient in our survey. And then what the good news was the high and faster adoption of artificial intelligence, especially in Austria, but also good in EU. And then the other point I wanted to show is the large gap between large and small companies. So I think these are the main points. And of course, we have much more information, but I wanted to summarize you in this way. We can have time to take questions before the coffee. Okay.
Yeah, of course. Thank you, Matteo. Thank you for this very interesting, insightful presentation. I'm sure there are some questions or comments. We have plenty of time. Please go ahead. Birgit.
Mille grazie. I have a question. I mean, this is really fascinating data on the self-reporting of companies where they use AI. Now, you know that Europe lost out on the ICT revolution because we did not use the new computers in the same way as the Americans. Isabel Schnabel always stresses the example of the police stations where you had the computers, but the Europeans used them more as typewriters. So when I see this at the different areas, do you already, are you courageous enough to tell us which activities may be productivity enhancing? Because I mean, I see the areas, but which one is really propelling our way of doing communication within the enterprises, which will make us more productive?
Okay. The answer is no. I'm not prepared on that. You are giving us a very good idea. We in the investment report, we are discussing overall the productivity because, you know, we have firm level data and we try to calculate the impact on productivity. You know, the big debate is like the computers. We saw computers everywhere, but not in the productivity statistics. This was the big quote, and this was brilliant. And with IE, I think we see already some productivity and maybe some impact on labor market as well, which is also a bit source of debate and concern. I'm not sure which one. So our calculation was bringing us to say that was already bringing 12% increase in productivity. Of course, there are a lot of caveats that I cannot spend now 1 hour for that, but the calculation I think is giving a broad range, and we are lucky to have this data to try to do that. And I think there is a broad literature now that is trying to calculate. Unfortunately, the real problem is that this is ramping up very fast, very fast. We have only the last 2 years, I would say. And of course, all of us are using artificial intelligence just as beginners now, and we are more and more using it. So I think the impact will be huge. I don't know. Do you have any prior to this? Maybe if we do further research, like which one will be pushing?
Internal processes.
Internal, yes. Yes. No, I agree. For sure, not the customer service. When we chat with these bots, I'm never happy. So that's my experience. But okay, that will be a good stream of research because in this investment report we always release a small piece in the first edition and then we go deeper. And now we are debating about this topic for the next edition. So that's a very good input. Sorry, I don't have the answer.
Andrea?
You showed us first a chart on the development of the perception of climate policies as a risk versus opportunity, and the chart that comes next was only a one period chart, as I see. Do you see in these developments also trends, or is this not really noticeable?
This is increasing. That's a good news. So these three measures, they're increasing. So companies are getting used to that, especially because, as I was saying before, it's not only this green image that some companies are trying to give, but the energy efficiency, they are saving a lot of money now, especially when there is a crisis. If you have done, some activities with targets, energy efficiency programs, and so on, they are really saving money. So they are increasing. These are still increasing. So that's the good news, that maybe the perception is that the transition is slowing down. But on the other side, the companies are still working, but especially on, this is energy. So that's, and we have seen also, we have a very short memory. We have seen booming electric car sales in the last 2-3 months during the Hormuz crisis. So immediately when there is a crisis, we find useful to think about some green transition. So that's, but this is increasing. Thanks. This was an easier question than Birgit that I was not able to answer. You were really nice.
Okay, Thomas. Okay, sorry.
Still, good morning, Luboš Komárek from the Czech Fiscal Council. I would like to ask you, do you have any evidence of some multiplication effects except, let's say, AI sector? And because you are from European Investment Bank, but still, if you have any evidence that if you put money to, I don't know, let's say industry, that multiplication is higher than to other sectors or services and so on?
So I think what artificial intelligence is changing is the ability to scale up quickly, So you see that few entrepreneurs can push very much and scale in sectors where you can scale. So when you have a big market, and that's why the US is prevailing very much on it. So I cannot say maybe a specific sector, but I see that there is ability to have something from zero and be competitive very fast. So this is constantly accelerating the trends. Of course, what we see is the IT sector, everything related with artificial intelligence is going very, very, very fast. What we see as well is that the ideas in Europe are there. We have really brilliant people. Young generation is really great. The financing is good during the first 5-6 years. And then when there is a matter of size, sometimes they go to London, to the US, and they need to move out from Europe to be financed. So these crazy people in the US that were putting money for innovation, that's the best environment for our companies sometimes, and that's a pity. So that's why the Saving and Investment Union is this initiative at EU level is trying to do something in this respect. And also, we as a citizen, we are very prudent in investing. So we keep our money on deposits. We are very prudent in Europe, and so we are also, all of us, a little bit culprit of this very innovative environment that we can find in the US.
Thank you, Matteo. Could you go back to the slide on AI adoption, please, or AI usage? I have a question on that. Yeah, if I understand correctly, then the US is ahead of the EU and Austria in the sectoral view on the right-hand side, right? But in the overall view, Austria
is ahead of the US, so I don't quite understand this as a conundrum.
Right, sorry, because there is a big, a small trick, because you see on the left there is a total firms. So more or less we have the same level of usage when you consider all the firms, but when you go on the percentage of firms using artificial intelligence, you see this is different than that one. That's the trick. So the basis is different. So when you take only the companies already using AI, you see that in the US, the usage is really broader. And we are more focused. That's why I think there is a potential in each company. They may feel, okay, we use a lot of AI, but look, you can use on a broader spectrum of activities. So that's the currents. I mean, these two charts are rather incurrent because the basis is different. So the denominator is different. I should have said during the presentation, but you were very smart to spot.
All right. If there is no further question, I thank you again, Matteo.
Thank you
for the presentation.
When trade policy moves, financing investments amid shifting trade opportunities. This is the topic of our today's discussion. Before we start, let me please briefly introduce our panelists. Hello and welcome. Our host today, Martin Kocher, Governor of the Austrian Nationalbank and former Economy Minister. Hello. It's okay, you can clap it in the end when I've introduced all of the panelists.
Hey, what you're saying.
Eva Liebmann, Deputy Secretary General of the Austrian Chamber of Commerce. Hello. Next to me, Valerie Brunner, board member of the Raiffeisen International Bank. Hello and welcome. And last but not least, Karl Nehammer, Vice President of the European Investment Bank and former Chancellor of Austria. Hello. My name is Marina Delcheva. I'm an economic editor at Austrian weekly news magazine Profil, and I'm very pleased to lead you through this discussion the next hour. We are meeting at a strange moment in recent history. The world is indeed reshaping itself, as Mrs. Stiftinger said in the beginning. I have brought three figures that sum up quite well the times we are living in. The first one is, according to the Stockholm International Peace Research Institute, global military spendings have reached a record high of $2.9 trillion in 2025. And they are rising steadily and constantly. In that same year, the worldwide low carbon and clean energy investment reached also a record high of $2 trillion worldwide. That says the International Energy Agency. And on top of all that, while in 2015, only 1.2% of the global imports were affected by tariffs, 10 years later, in 2025, that figure has risen up to 11%. Or in other words, the world regions are protecting themselves and protecting what is theirs by rearming, by making themselves less dependent on fossil imports, which are highly fragile right now and the prices go up and down, and by shielding their own economies from competition. So, let me start with a deliberately simple question to all of you. I would like to ask you for a brief initial statement. Regarding the geopolitical situation, it remains highly unstable. Tariffs go up and down and then up again. Supply chains are being shattered and rebuilt elsewhere. What is the one thing that Europe, and in particular particularly Austria, in this crisis should definitely not get wrong this time? Mrs. Brunner, do you like to start?
Well, thanks a lot, Ms. Delcheva. To answer it very briefly, I think on the overall landscape that you described, it is a lot about European competitiveness. It's not so much about whether our ship can navigate through bumpy waters, but whether it's prepared for the open sea at all. And hence supporting the resilience and flexibility of European businesses is, from my perspective, a very big and important aim. And there are many ways, I think, to support that and not let us get into a structural disadvantage to either the US or Asia or other parts of the world. So for me, that would be an important factor not to fall into that trap of succumbing to the uncertainty and making us then lean back and just wait and see.
Thank you. Mr. Nehammer, lessons you've learned from many previous crises?
Well, I think the most important thing is that we should not underestimate us as Europeans, and we should not underestimate our strengths. I think this is really important, especially in these times now. We are living in a time of a lot of disinformation campaigns, insecurity in the world, and especially now we can see how strong the European Union is, how impactful politics of the European Union are in the world. Think about, for me, this is the best example. Why do so many countries want to join the European Union and not other countries in the world? And this is, I think, the best proof and the best message we can send. I think really now in so different times we have to face, and we have them to face now for more than 6 years. This is really a crazy period of time. I mean, I'm sitting beside Martin Kocher. He was a former Minister for Economics and Labor, and we both know what it means to stay strong in really difficult times. And this is the reason why I say this. And a lot of other competitors to the European Union have a highly interest, to disinform our and unsecure our societies in our member states. And then, especially because of that, it's so important that we are resilient, that we praise our value of a liberal democracy and why we have to stand and fight for it.
Thank you. Interesting thought. We're indeed the only region expanding their territory without armed forces. Mr. Kocher, your one thing, one lesson learned for this crisis, it's not your first one.
No. First of all, it's great to have such a great panel at the Austrian Central Bank, at the Österreichische Nationalbank. So thanks for the event, the joint event. I think you have to analyze what are the strengths of the European Union. The strength is still its economic power. And what we shouldn't get wrong is actually losing this strength. And when you look back, it's clear that we have profited a lot from a development in the world that was conducive to European growth. It was the peace dividend you mentioned. It was the International Division of Labor, a strongly export-oriented continent. We actually profited a lot from what happened since whatever, the 1990s perhaps, or at least the beginning of the new century actually. Now the times are more difficult geopolitically for Europe, but the strength was always the same. The strength is the single market, the strength is economic openness, the strength is having lots of trade relationships with parts of the world that share our values, and I think extending that, making sure that we do everything to further the strength in economic power is helpful for Europe, because Europe will never be a military superpower and should probably not be one. It will always be an economic superpower. It is an economic superpower, but it can extend what we have. And when we look at the proposals on furthering the single market, on the savings and investments union, the 28 regimes and so on, I think these things should actually be put in practice. They should be realized during that term of the European Commission. I think that's the most important one for me.
Mrs. Liebmann, what?
Well,
what Mr.
yes, many wise words have been said already. So also good morning, hello from my side. I think I would like to take actually one point that the governor mentioned about the trade relationships. This kind of negotiations that we had, for example, with Mercosur, is something I would not want us to repeat in the near future, because those kind of trade agreements are so important. They help diversify the markets, which is also from our, of course, businesses, the agenda, you know, more markets, diversification, new opportunities, and this helps, of course, compensate. Is it a discussion about tariffs? Is it, you know, other forms of decline, like interruptions like we have now in the Strait of Hormuz? So with one word, let's negotiate, of course, exchange our thoughts, but then come to a point, make a decision and say yes to trade negotiations and agreements.
Thank you. We will be going into detail in our new friends and corporations a little later that hour. But let me start, Mr. Kocher, with you. And amid all that uncertainty, geopolitical chaos that is going on, once again, the disruption of energy supply chain, the war in Iran has caused through the Strait of Hormuz. Central banks have actually one real bazooka to react to all that, namely interest rates. Not even 2 weeks ago, the European Central Bank raised its key interest rate up to 2.25% for the first time in almost 3 years now. Can you tell us, how do you make decisions in fragile times like these, where every next day the situation could be completely different? How can you rely on your models, and how can you agree on an interest rate for the next month?
So that's not easy, and it's even in reality it's even more complicated. It's even more complicated because there is, of course, a lack of time until an interest rate change propagates in the economy. So we usually have to take interest rate decisions that manifest themselves in the entire economy 6 to 12 months later. So we have to take our, of course, expectations into account. On the other hand, first of all, there's quite a lot of instruments we have in monetary policy. Interest rates are one of them, but of course, this is the one of the interest rates are those we use most often because they can easily be adjusted. And at the moment, of course, given this uncertainty, we do not commit ourselves to a certain interest rate path because it makes sense to be able to react to developments on the ground, to react quickly if necessary. What we do actually, and I think that's very helpful at the level of the European Central Bank and the Eurosystem, is we have different scenarios for the development of the economy. And 2 weeks ago, we published 4 scenarios. Our baseline scenario, that's the expectations we have with regard to the inflation rate in the future and economic activity, so growth in the future. But we have an adverse scenario and a severe scenario if things turn out to be worse than expected. But we also have a mild scenario that actually assumes a much quicker resolution of the problems you mentioned in the Strait of Hormuz and the end of the war and stable conditions for transport. And for all of these scenarios, these are 4 scenarios now, the baseline and 3 scenarios, an interest rate hike 2 weeks ago was the optimal decision. So we try to actually lay out the different scenarios. We try to make sure that we have a robust decision, and it was clearly robust to raise interest rates because it was the optimal decision for all the scenarios. Now, for the future, the scenarios imply different paths of the interest rates. But given the uncertainty, it makes absolute sense to wait. The next meeting will be towards the end of July. We'll have another 4.5 or almost 5 weeks until we meet, and lots of things might change. Hopefully, until then, we already have an agreement between Iran and the US, and things turn out to be better than expected. But we don't know, so we keep our data-dependent, meeting-by-meeting approach, and then we look at the scenarios and choose the interest rate policy that fits the scenario that is most likely, or that fits perhaps many scenarios at the same time, which was the case 2 weeks ago, actually.
Just one brief question to you once again. You mentioned the Savings and Investment Union. What do you think the impact of all this, as described, will be on the EU markets? All these disruptions coming from outside?
So I think it's not so much about the disruptions, about the strengths of the European Union. I think there's a key element to the Savings and Investments Union, or the Capital Market Union, as it was coined before. The key element is when we look at our competitiveness, and what we can achieve in terms of economic growth, we are lacking a deep capital market in the European Union. I think everybody agrees on that. We have the same number of patents per capita as the US. We have the same number of bright people that actually also found companies, startups, but we see that many of these startups are bought or they move to somewhere else where there's deeper capital market. And you need equity. Credit is important. Banks are important. But for the capital markets, you need also equity for especially quickly growing companies. And the Savings and Investments Union will help actually creating a deeper capital market. It's not the solution to everything. We need less fragmented European rules. It's still a fragmented capital market, but it helps a bit to get one step further. And I would add one thing that I really find important. We often talk about these capital markets, and it's very abstract to many people. We talk about how important it is that we have venture capital for firms to grow. But there's another aspect to the Savings and Investments Union. We have a lot of investments needed, and Karl, you know that much better than I, investments needed for infrastructure in the world, but also in Europe, for the energy transition, for becoming climate neutral, but also for transport infrastructure, mobility, train networks, road networks. And given the state of the public budgets within Europe, not everything can be financed publicly. That's impossible. So we need deep capital markets to also channel private capital through different actors to these projects. Otherwise, we're not going to achieve our targets that we have also from the public perspective. So it's not only about companies. It's also achieving what we want to do as societies. And that the capital market is key to that.
Ms. Brunner, you were nodding. Do you agree? I assume you agree.
No, fully. I mean, I think one cannot put it more beautifully than our governor did it, because, and I'm nodding because for banks, this is exactly our playing field in order to enable companies that want to access markets to do that in several countries of the European Union. Yeah? And currently, one company that wants to go public, it can also be a small one, but it can also be a big one, has to file a prospectus in each and every country, and there are different rules and different kind of policies to obey to. So it is only the very strong ones do that. Yeah, so the very strong ones and very resilient ones, and I think it should not be that much of a hurdle of a company or a public project to raise the funds, because the capital is there. It wants to be deployed, and currently it goes into the easier investment area of US companies or other parts of the world, while we all jointly would like to use this immense number of private available funds for European companies. So I have full trust in our authorities to be able to, not in the midterm, but rather in the short term, make big progress, because it is crucial. I'm very much of the same opinion. Yeah.
Raiffeisen International finances or co-finances many big projects, not only in the renewable energy sector, but also in resilience and the dual use and defense sector all over Europe, in many European countries. For example, your renewable energy asset base is worth 2 billion right now. Can you tell us how this field of investment changed within the last years? What projects are going on? And this is a question I, for a long time now, wanted to ask a banker publicly. Has financing European military now become good for business and for the image? Was there a shift in the perception?
Let me try to start with the first part of the question, and then I'll also go to the second part. So the first one, energy transformation has beautifully evolved because it has kind of moved away from being a policy-driven wish to have more renewable energy towards a very clear economic advantage of our countries and of companies as well. For 3 reasons. Energy prices are high due to the many events that we experienced in the last few years. The costs for renewable energy projects have decreased substantially. There is I think a more than 50% decrease of prices for photovoltaic and other gadgets. So higher selling prices, lower production prices, and then also the system transformation has actually progressed a lot. What we do not hear so much yet, beside wind and solar and water energy, is geothermal. I think that might be the next big add-on and move, because it gives us a stable base load, irrespective of wind or sun shining. But I mean, altogether, summarizing, the continuous transformational path is now very much economics driven, and that is the best basis to actually increase the developments here. Yes, you have mentioned we have a large book here for our industry concentration part, and currently the strong focus is on solar, but wind is coming up more and more. Half of our portfolio is coming from financings in Vienna, the other half from the network banks, Central Eastern Europe, which has a huge growth potential still in that aspect. And the majority of projects we currently see in Romania, almost 50% of the projects in the pipeline are developed in Romania. Bulgaria is a big one, but also Hungary and all the other countries are piling up and actually moving up a long way now to reach their net zero targets whenever they are, between 2040 and beyond. But there is medium steps, intermediate steps. So here it's a beautiful field, and nobody currently contests that it is meaningful to support that, which is not entirely true for the second part of your question, which is the huge investment backlog on the defense and security autonomy of Europe, so the entire rearm Europe projects. Here I would, if you allow me, actually ask a little bit of a provocative question, whether Europe actually knows what Europe wants. Because for banks and also for asset managers that channel private capital, it is not entirely clear what the policy framework actually shall allow. And many stakeholders, like commercial banks, have to employ quite a lot of people in not only reading the current policies, but also then of interpreting them, because the reading is not very clear. And here I would say our stake as Raiffeisenbank International is much smaller, but it doesn't necessarily need to be like that. So there is a lot of initiatives that could help us support the Austrian economy and also countries in our core region, Central Eastern Europe, that could help us much more to support them. If the question would be clear that you had been asking, is it good or not so good in the public or stakeholder opinion to be engaged in the large defense investments? I would wish, as a pure business person, I would wish to be much more engaged, of course, within the borders of what is allowed by the Austrian civil code and by the codes of all of the countries where we are present. But I would say policies are not making it quite easy for us.
So we want to rearm to invest, but we are not quite allowed to. Ms. Liebmann? That's a very Austrian specific.
Well, if I may add to these points that you mentioned, it's true. Actually, what we are facing is the need for clarification in terms of guidance, and I think the EIB has done already a very good job in, making these clarifications in terms of ESG. We have also seen from the European Commission that they had put forward, for example, on the term of sustainability and notice. But just an example, the Austrian Financial Market Authority does neither have a guidance nor Q&As. What is sustainability really covering in Austria? And this is something that we are, for example, as the Chamber of Commerce, together with the Austrian industries, are having a discussion together with the banks, Financial Market Authority, also, of course, the OeNB and the Ministry of Finance, to talk about those kind of things, because it doesn't help anybody, to just shift the bullet from one to the other and say, you're wrong, you haven't provided, and so on. So what is missing is this clarification. And also, second point I would like to add is just think about other items that could be used. We have that, for example, with SMEs. There is an SME supporting factor that allows you for less risk-weighted assets that you have to put aside as a bank. Why not talk about a defense supporting factor that would also allow banks, more businesses or to do more businesses in that area? So this is what we are trying to talk about, have this discussion ongoing to help the banks, which also need to, of course, argue against their investors. Why are you doing it? Is this safe what you are doing? Is it not safe? So let's see. We are having this in July, this discussion, so hopefully we can provide some more clarifications on that.
Mr. Nehammer, as the Vice President of the EIB, one of your key areas of responsibility is the reconstruction of Ukraine, and therefore a lot of coordination, especially in Eastern Europe. The EIB has quadrupled its defense-related investments, defense and resilience-related investments within the last years, up to 4 billion euros. Which is also, I guess, a record high for the EIB. What is happening in Europe right now, not only on the defense side, but also on the resilience and autonomy side? And do you think the European Union and the European countries can catch up with all the developments in the military and tech sector happening in the US or in China? Or have we lost this competition long ago?
A lot of questions in one question. But first of all, I want to mention that Europe is now operating in a fundamentally different security environment, and this is exactly the reason why the EIB, the European Investment Bank, made a big shift in their policy. Till March 2025, it was not really allowed to finance security and defense. Since March 2025, we are allowed to do that. We finance not ammunition and weapons, but all the other things can be financed now, which are necessary for security and defense. And this means a lot for a bank. And we started in March 2025, and we invested in 2025 4 billion euros already, and the target now for 2026 is 4.5 billion. And there can you see how strong the impact is. I don't know if you know that, but you know the EIB, the European Investment Bank, and the European Investment Fund, we are a group, founded the fund later, but the bank founded 1985. We have the same decision maker like in the Commission. This means we need the board which approve afterwards the policy of the bank. 27 member states have to decide because 27 member states are the owners of the EIB, of the European Investment Bank. And the environment now, the security environment is unstable, and I'm really thankful to the board of the EIB and the Commission as well, that now we have done this decision and now we can finance security and defense. And to make it more concrete, this means, for example, that we finance now, or will finance, the facility, the camp for the German brigade in the Baltic states. This means an investment in the height of 540 million euros. And this is concrete. And security and defense means not always direct financing military equipment or dual use. It can also mean that you strengthen the capacity of a bridge or to improve the capacity of streets or harbors. So it means a lot now as well for the European economy because this investment is in the European Union. And you asked me about Ukraine. You know, this is really now my oversight, and this is for me very special, to be honest. I think 2 weeks, 2.5 weeks now ago, I was in Ukraine, and it was a very emotional visit for me. Why? Because when I was there more than 4 years ago now, the Russians left Kiev already 9 days before. I could see Bucha and the mass grave and the dead bodies, and now I had the chance in my new role to reopen a primary school in Hostomel. In Hostomel, the invasion, the full-scale invasion of the Russian Federation started. The school was destroyed. With the European investment now, there is a new school with more energy efficiency, which is really important in Ukraine. You have to think about that, the fact that the Russians always destroy civil infrastructure. This means, for example, district heating. And this is meaningful if children can learn in a well-temperatured classroom or not in -2 degrees, minus 2 degrees. Yeah? And also we finance a shelter for the school. This is necessary now in Ukraine. But the most impressive thing for me was to look in the faces of the children. And you know, if you have the chance to invest in the future of a country, this is what we are doing now in Ukraine. We have a, I would say, short, mid, and long-term strategy in investment. Short-term means all what matters now in reconstruction, investments in rebuilding infrastructure, connecting against, investing in grids, investing in district heating, investing in safe water supply, but also in schools and hospitals. I could see 3 renovated hospitals with European Investment Bank money, and this is only possible because we are totally aligned with the European Commission, because these investments go aligned with the guarantees of the European Commission for this kind of investments. But you know what was so impressive is when you are in a hospital where you can see the veterans from the front line. They lost their arms, their legs, maybe their eye, or lost a half of the face. And you have the chance to talk to them. You can see and feel the spirit of them till now. If you talk to them, although they are so badly wounded, they want to go back to the front line and fight for their country. And this kind of investments show on the other side that how important it is not to give up and to think about where makes it sense to invest, where makes it sense to, this is the short-term perspective as well, also to invest in small enterprises, to give a perspective also for the companies there, for the people who should return if there is a ceasefire. Think about the refugees. If you think about the veterans, which should be integrated afterwards in their societies. And what is really special in EIB, we collaborate also with the EBRD. We are strong partners in investing, also with the United Nations, to be honest, and the World Bank, to invest in Ukraine. But what is really special now in the European Investment Bank is we invest all over the country. This means also close to the front line. So to give you an example, we finance now more than 600 projects in 120 municipalities all across the country. This is so important that the people see and feel that the European Union is on the side of Ukraine. And this is what we are doing now. In the midterm perspective, we invest in the connectivity of Ukraine to the European Union. This means border management investments. This means especially infrastructure investment in the railway system. And on the long-term perspective, to mobilize as well, again, private capital, which should be invested in the Ukraine now. And the EIB and the EIF is not allowed to invest outside Europe, but the EIB is here a reliable partner for other investors. And therefore, we also collaborate, I think, really successfully as well with our American partners, to be honest. So I think it's a good example for the solidarity on the one side. And on the other side, it's a super example how important it is to also organize strategic investments. Because investment in Ukraine means also an investment in security for the European Union. And we learn a lot now from the Ukrainians what this means. And when it's allowed, only 1 minute, I want to echo what the governor said. You know, EIB is the right partner for this big issue, you know, from that we have still this strong gap between research and innovation capacity, but on the other side, we face still the gap afterwards in scaling up from the idea to market, from ambition to innovation and then to action. And the EIB and the EF therefore can be, you know, the bridge for this kind of investments. And I want to give you again a concrete example for that, what I say. We have the ETCI, the European Tech Champion Initiative. We love acronyms in the EIB, to be honest. And this ETCI is super successful because we supported 12 European unicorns. And this is meaningful for our market. This is meaningful for our economy. And this is why it's so important now also to start the next ETCI 2.0. We are now collecting money from the member states again for this initiative because the scale up is so important. The EIF is a fund of funds. We collaborate excellently with local banks as well so that they are able to give cheap loans with small interests to the small companies, to the small enterprises. So this is where you can see what we are for, European Investment Bank and the European Investment Fund as a group, and I only wanted to underline what you said.
I want to catch up on the local banks. One of that local banks is Raiffeisen International in Ukraine. What do you think the impact of the reconstruction of Ukraine will be on the European economy and on the integration of Ukraine into the EU markets? We all hope this war will end soon.
Yeah, you're perfectly right. This is the major and main theme. Yeah? When will it end? And the sooner, the better. Yeah, as RBI, we are the biggest international bank in Ukraine and the fourth largest of the entire banking landscape within the country. The first three ones are state-owned banks. And yeah, roughly 5,000, a bit more than 5,000 employees we have in Ukraine, spread all over the country. Your description, Mr. Nehammer, resonates very well with me. I experienced the same very much deep and full emotional spectrum of admiration, of despair, of this dual reality that Ukrainian people are living in. There is sunshine, full business going on, full economic activity, and at the same time, permanently the app can sound and you have to run down in the shelter. Everyone goes. People now have already the capacity to listen to the sound of the attacking missile, whether it's something where they have to go down instantly or whether they have 4 minutes of time and can still finish their coffee or their telephone talk. It's incredible, the kind of situation that the entire population has gotten used to and is managing in a beautiful, really in an incredible manner. Also great that really to hear that EIB is spreading the support programs all over the country. For example, for us, those branches that are near the front line in the meantime have been transferred to the to the underground. So we have a lot of banking facilities provided underground so that people can bank safely without any alarms. What I think is incredibly important for EIB, EBRD, for the EU support that is being given for the already now for the projects that are being undertaken, and it doesn't only start when
with
the peace is there. It since quite a while, energy infrastructure, road infrastructure, new schools, new hospitals, that has already started. It would be incredibly important to make sure that European companies are the suppliers of those reinvestments. There are, I don't know, observations here or there that also suppliers from other countries are getting the share of the cake, which I would not find very intelligent from our European Union kind of direction. There is a huge number of not only Austrian, but also Austrian, but many CEE companies that can provide the excellent rebuilding facilities, and risk sharing by supranational institutions is of the utmost importance, because this is exactly the instance what those institutions are best at. And again, the joint marching of public money and private money is exactly what will be the difference to support Ukraine. Our initiative as RBI Group, we are collecting all the, obviously, the ideas, initiatives from all over Austria and our Central Eastern European region, is called not Rebuilding Ukraine, but Rebuild with Ukraine, because it is of utmost importance that the country itself also develops its institutional reforms, its entire readiness to kind of restart whenever the war is over. And so the movement in itself will be big, but already now the brave ones are contributing a lot, I would say. And it's great that EIB is also having this on top of the agenda, and that Mr. Nehammer is leading that. That's excellent.
I would like to put a spotlight on the Austrian perspective, Ms. Liebman. What chances do you see in the reconstruction or rebuilding Ukraine for Austrian companies? So far, we've contributed a few things, but not as many as you would wish.
Well, if I wish, I think it's really this delicate balance between, of course, making business and in this time where still the war is ongoing and all the emotions, you know, it's really tough. But what we have in Austria, I think everybody knows, we have one coordinator for the government, Mr. Anzengruber, who is trying to cluster those kind of branches that we have an opportunity also to invest in. We as a Chamber of Commerce also have a coordinator for the business side, which is Andreas Herz, our Vice President. And for example, as it was also mentioned before by you, Karl, on the veterans, we had a call last week with the Deputy Minister of the Ukraine responsible for the veterans, and they actually ask us for help. They ask us for of course, synergy with the banking sector, with the EIB, but also with our knowledge and experience in, providing with banking products, with loans, with good financing. But also on the other side, of course, with our, Pensionsversicherungsanstalt, the PVA, is also invested in those kind of operations where we help to get veterans back on track as soon as they, of course, have, their one leg back or, whatever injuries they might have. So you see there is a huge area of possibilities. It's not just green energy, it's not just infrastructure, it is also about thinking what does the society need, not only when the war is over, but already now, as we're in this process where we need to build up, the workforce of tomorrow. And this is where we as a Chamber of Commerce, also in joint efforts with the coordinator for the government, try to address those different clusters and then making, if you want, if I may say so, making this kind of business that helps both sides and are of interest in both sides.
If I may just quickly add one thing,
please.
I think it's important because perhaps not everybody knows in the room. Austria has been the 5th largest investor in Ukraine before the war. In absolute terms. So that means we are actually quite important there. I mean, of course, the large countries in Europe are stronger, in the US, but then it's already Austria. And it's hundreds of Austrian companies, and RBI is one of the largest, or the largest even in terms of staff, but hundreds of Austrian companies being active there and keeping active there. They're producing there. They are doing business there. So it means there's a large network already there. And of course, if the situation improves, if there's a ceasefire, if there is a chance for peace, then these companies will reinvest. There's lots of things to do, even within that network, in addition to what you mentioned in terms of the infrastructure and rebuilding of what has been destroyed. So I think Austria is in a good position, but all depends on the developments on the ground, and hopefully it will be a positive development in terms of getting closer to peace.
Let's get back to trade policies and the disruption we've seen recently. Ms. Liebmann, the European businesses have had a quite rough time. Also, the whole of Europe had easier years than those we are witnessing right now. Can you a little bit sum up the costs of the ongoing war in Iran and all the disruption of the fuels, and of course all the disruptions Trump's tariffs brought to the European Union as a whole, but also to Austria? We've had a very interesting insights on the disruption of exports to the US from Austria. They dropped quite a lot. So can you sum up the costs the disruptions brought to us and probably the chances they are bringing?
Yes, it's always staying on a positive note, I think, than putting in, of course, these painful numbers that we also see. I have prepared, of course, when looking at the exports, so Austrians' exports fell by 0.5% in 2025 in general. For the US, as it's also known, the United States is the second most important export market for Austria. In the first quarter 2025, Austrian exports also were 14.6% lower compared to the first quarter of 2024. So of course that shows, there is because of this disruption a decrease going on, but nevertheless, what is the big hurdle for companies is more this sudden abrupt stop, and then of course they have to try to negotiate what is the next supply chain that they can maybe dive into. It's not so much about that, the trade stops like we see with the Strait of Hormuz. We were actually quite amazed that we were not as affected, of course, in the first round, depending also, like you were telling us at the beginning about the scenarios, what comes next. But it is really about the direct or indirect effects that it might have. And of course, with the Strait of Hormuz, you have to differentiate here. It's about the second round effects that we have about, these delivery and supply chains that we have. On a positive note, I also have provided a little bit numbers in terms of what have the foreign trade agreements actually brought us. And for example, when we look at the US tariffs, the FTAs actually, they have offset around 33% of the EU trade losses that were caused by the US tariffs. And they also have helped to compensate about 63% of decline in EU exports to Russia. So that gives you, like these two numbers, I think they show you what kind of potential we have when we enter into these trade negotiations, and also the single market. I think we should also not underestimate, not just look beyond, worldwide. It is important. We have Mexico, we have Indonesia, hopefully, we have Australia, India. So these markets are being addressed. But the huge potential also lies within the single market. And I think this is what we also should keep our eyes on and force, that we all come together, reduce the hurdles, reduce the barriers that might exist in the single market, no question about that. But I think this gives you an indication where the good and the bad lie very close together.
Thank you. Our discussion hour is nearly over, and I would like to stick to the positive things and end on a positive note. We have not only lost allies, but we've gained as well new friends. The European Commission, for example, is signing one trade agreement after another recently with the Mercosur states, with India, and while others are maybe setting the world on fire. What opportunities do you see for the European markets and our resilience mechanisms to get out of that crisis a little bit stronger and more resilient or more prepared to what is ahead to come? I would like all of you to invite to join with your answers. Mr. Kocher, let me start with you.
I can start, but if I already started very well, I think there are three levers for pushing up growth in general. It's the single market, it's the most important one. It's free trade agreements or deeper agreements with the parts of the world that share our values, and we have been seeing a lot of ambition here, fortunately so I would say, and we should go even further. Let's briefly talk about something we have experienced 10 years ago, CETA. I remember the huge discussion going on. When you look at what happened with the Canadian-European Free Trade Agreement, it is an example for opportunities on both sides, no disruptions of market, nothing happened, and I'm pretty confident that this will also be true for other agreements. You mentioned India and you mentioned Mercosur, there's also Australia. It's not only an economic idea, I think it's also a political idea. Mark Carney, the Prime Minister of Canada, has mentioned or has put up the idea of the middle powers. And perhaps the European Union is not a middle power, but it is, of course, necessary to seize the chances of the division of labor internationally. If we don't do that, that reduces our opportunities. We have to be sovereign in some aspects, but we cannot produce everything, so it's very important. And the third one that I wanted to mention in terms of the chances is enlargement of the European Union. Clearly also, we have been seeing that during the last 20 years, all the enlargement initiatives led to higher growth rates within the European Union. And there's a couple of candidates at the moment. They are very different in terms of how quickly they may be able to exceed. But in the end, it helps to become stronger. And taking that together, I think, constitutes a certain basis, a foundation for strong economic growth within the European Union, and it should not be, as I said, exclusive. It should open up to other parts of the world that engage with the European Union. I think the strategy in that respect is promising, and also the speeding up of the strategy has been, from my perspective, desirable. But we have to go. We still have to go quite some distance. The single market is not perfect. There is more free trade agreements to be finished. There's the negotiations going on with a couple of countries, and the enlargement process is demanding and should lead to some tangible results soon, hopefully.
Ms. Brunner?
Hard to enrich what the governor has been mentioning. Maybe a few little add-ons. I'm fully convinced that the enlargement, as you say, is a very important step for the EU. And this idea of having it in gradual steps, so allowing the new accession countries, especially the Western Balkans, allowing them to already tap the waters with some important but little steps, would potentially help the entire process to become also credible for those countries, yeah? Because waiting for the big bang until all 36 clusters or whatever have been achieved could be too stressful for part of the population there, and allowing them with little steps in this gradual approach is a very important feature. Also on the banking side, there are those initiatives giving equivalent status to those new accession countries would already help unlock a lot of investment financing possibilities for the bank. So here I understand that also you and the Austrian Nationalbank is supporting this approach, which is very important in the sense of Albania and other countries as well, Ukraine as well. I would say the single market, the free trade agreements, very important also from a commercial bank, because what are we now talking to our clients about? We really saw, and this is another positive effect of this very unfortunate trade war situation, is we have much richer client conversations nowadays. Relationship managers ask about exactly the business model, the supply chains, the off-taker chains, how flexible are they? As banks, we can support the flexibility. So I see, with all the negative downturn, because investments due to the uncertainty have gone down, but the interaction between commercial banks, for sure also supranational banks, and corporate customers have gained a lot of quality, I must say. And so for me, the second major part is, please, to the overall policymakers, give to the European stakeholders some consistent regulatory frameworks and initiatives, so that we do not see ourselves in a disadvantage to other continents. I'm mentioning it because currently US authorities are giving much more regulatory freedom to US banks. They have much more capital to spend and invest, while EU banking regulation is as it is. It helped us in the past to be more resilient, but now could be that a certain level playing field is an important feature. And having long-term predictable EU rules would definitely support an investment climate that can bring the European Union, but also Austria, much forward, I would say.
Mr. Nehammer, strengthening our resilience from a European point of view, probably. What chances do you see?
I think it's not now a surprise that I will say that, but the EIB is the perfect partner for that.
Yeah, you have to say that. You're the vice president.
We invest more than, or nearly 90 billion a year in the European Union, single market, and we invest more than 10 billion outside the European Union, exactly for that reasons. And I think this is where you can see how important it is, especially after all that what we could see on how dependent we are on fossil energy, how dependent we are on supply chains. Maybe now we all talk about the Strait of Hormuz, but please remember what happened when a big ship blocked the Suez Channel. And suddenly the supply chain debate was on the table in the whole European Union. It was only one ship which blocked the Suez Channel. So I think these investments can help, will help, to invest in diversification, to support strategic sectors in the EU and outside the EU. And especially in this case, again, is this investment in the Ukraine so important because it's like you say, we are in a race there. If there is a ceasefire, we have a lot of competitors. China is ready to invest, Turkey is ready to invest, United States are ready to invest, India is ready to invest, United Arab Emirates ready to invest. And when we invest, we, I mean European Investment Bank, it means European companies have the chance to the market in Ukraine. This is the point. For that, the collaboration is important, the collaboration also with other international financial institutions. But I think you can see also what does this mean for Austria. This 90 billion investment in Europe means, in the European Union, means 27 member states profit from that. In Austria, for example, I opened now a super hybrid park. I don't know if you know what that is. It means solar, wind, agriculture, and storage. We opened in Burgenland, in a company, it's named Buschbeck. Now, because the times are changing really fast, but now the biggest storage for renewable energy. And farming is possible under the solar panels. And you can see this is innovation. Before that, you need research. And for all of that, you need investment. And this is why I'm an optimist and really positive, thinking about the future also in really difficult times. But you see, we have the knowledge in the European Union. We have the power of the people in the European Union. And we have super collaborational partners when I look here now on the table. And with this kind of combination, we are stronger. And this is what I said before. We sometimes think about ourselves and what we need now, especially in these times, especially where still under threat of this disinformation and destabilization and campaigns, especially to show this unity, this strength against Russia and others. We are competitors with China and the United States, but we are also partners with China and the United States when we want to trade with them. But if we know that and we think about our strengths and our possibilities, then I think we will overcome all these issues we discussed today.
Thank you, Ms. Liebmann.
Well, it's always difficult to be the last one after the main points were already told. Look, I think whenever there is a crisis, of course, it's known there is a chance. I think we in Austria have taken the chance as much as possible within the European Union. I think it was again a wake-up call, like it was when you think back at the financial crisis, you know. But nevertheless, one thing that always keeps me a little bit worried is you mentioned speed. We need speed in Europe. We need decisive decisions, and that's where the United States is just so much faster after the financial crisis. You know, they cleaned up, they made the decisions, they put forward the Dodd-Frank Act and so on. We in Europe were debating, you know, whether we need another authority or not, and with what kind of qualifications and tasks. I think in the end, it's the businesses that suffer. They suffer if there is no clarity. They suffer if we are not fast enough in terms of regulatory frameworks. This is my wish, so we can use this potential. There is a lot, you know, be it close by with the single market or be it abroad the world. But definitely what we need is speed and the decisiveness, because the courage is there from the businesses to go and enter into those markets. So hopefully we also learn from that, but we will do our best, I think, to put forward this message, and I hope you do too. Thank you.
Very strong final words. Thank you. Thank you, distinguished panelists, for debating with us. Thank you, dear audience, for coming and listening. Unfortunately, our time is up. but I think in a more informal setting, the panelists will be happy to answer some of your questions afterwards at the lunch break. Thank you for having us, dear National Bank.
Just the final words of thanks again to the organizers of this event, from the EIB side, Matteo Ferrazzi, and from the OeNB side, Paul Ramskogler, who put together the program. Also, big thanks to our event team. Karina is back there supporting us on the technical. Thanks to all the speakers and panelists and the moderator. And finally, to you, the audience who came here on a hot summer day, listened and also engaged in a lively discussion in the first part. Thank you. There is more opportunity to discuss outside. The buffet lunch is waiting. And hopefully see you in 1 year from now for the next EIB OeNB high-level event. Thank you.